All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And let's jump into what this chart has to show us, right? So Nano Dimensions was in a run, obviously after being pretty quiet for some time in a sideways direction, and then it got kind of quiet here. It bounced up, fell back down, bounced up, kind of went sideways, and from this point forward it just skyrocketed to the point where we're at now. And Nano Dimensions is now back into a bearish trend, obviously broke through the 50-day moving average and now being dominated by the bears. Could the bulls recover? Those are the things we're going to go over right now as we see our new positions with the resistance level and supports. But something I'm noticing is that if this was to break through support, which we're going to talk about in a second, it's going to get closer down to these numbers down here. So these numbers are important. It's only like about $1 away, and it's actually $3.45. That's one of the lowest points before this run, so I'd keep that in mind. And also, one of the lowest points has already been broken through before this continued, which I had spoken about yesterday in my video, and it was 455. That was an important point, either 455 or 454, give or take, but an important point before this actually would hit newer lows, and it broke through it. So here we are now at 443, and we're going to look at our new support level and resistance level as things have changed. And again, the highest point here at this run, which was actually rejected twice, was $6. So that's still an important number. And quickly after that, it started to dip. Bulls reappeared in hope and speculation, bringing it up to 580. Excuse me about that, 580. And since that point, it leveled off and started to fall. And we're now below the 50-day moving average. So our resistance level is important, but it does not signify that the bulls have gained control. And our support is very important, which I'm going to emphasize as we go into this. So 50-day moving average is important right now. It's 481. It is actually above the price at 443, and right now we're in bearish territory. The moment we cross the 50-day moving average of 481 and we end up back up here, we're in bullish territory. The moment we're below it, we're in bearish territory. So it's super important for the bulls to keep in mind that they need a breakthrough 481. That does not just signify that they've gained control. They need to break away from it. Now, the bulls need a break through this resistance level before getting to the 50-day moving average, and that's 456. The bulls need to turn 456 into a support and break away in the upward direction to hit newer highs and newer resistance levels to cross the 50-day moving average in an upward direction to get deeper into bullish territory. So 456 doesn't signify that the bulls have gained control. It just allows us as investors to have an indicator of which direction this is going. So if 456 is turned into a support, tested and proven, this could start to work its way up to newer highs, reaching the 50-day moving average and getting back into bullish territory. On the other hand, we have what the bears want, and the bears want to cross this number. This is the lowest point reached in the day, and that is 427. If the bears break through 427, they're pulling it further away from the 50-day moving average in a downward direction. So I want to emphasize to all investors, pay very close attention to how this stock is reacting if it breaks through 427, and how quickly is it hitting newer lows and newer support levels. Are the bulls even trying to reappear and bring this one back up, or are the bears just tearing this one down to get it further away from the 50-day moving average as far as possible? So put your 1 minute, your 5 minute, your 15-minute charts and see the behavior of the outflow and the inflow, and also the volume. I mean, volume was a little quieter today than it has been in the last couple of days when this was trading last week. So keep that in mind as well. Now, we are really close to the 50-day moving average right now, so there could be a turnaround where the bulls can reappear. Obviously, they need to break through the 50-day moving average, but they could try to reappear and work their way back up to bullish territory, or the bears can actually take advantage of the fact that they've already ended up in bearish territory below the 50-day moving average and tear this one down in a downward direction. So making it harder for the bulls to actually reappear and bring this one back up. So we're going to have to see, again, how this plays out. Pay very close attention to these numbers And obviously, breaking through this resistance is just a sense of direction. The bulls need to break through 481. And again, if the bears break through 427, pay very, very close attention to the behavior of the stock. I hope that with these cues, you guys are well prepared for tomorrow's trading day. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.